Hello and welcome to another scalping strategy, which I called it, as you could see on the thumbnail, the dragonfly system. When you're scalping, you may think that the market volatility is your only enemy, but let's be honest, the commissions that you pay to the exchange that you're trading in are way worse. So I highly recommend to trade on Bybit, which I pointed out in my previous videos, and I've said the reason is because the fees are a lot lower and it's really optimized especially for scalpers and any other investors slash traders too. So waste no more time, you can use my affiliate link down in the description right now and you got the chance to get a mystery box and open it, and it can contain from 50 cents all the way up to $500. So just try your chance. In this strategy we will look for accuracy at a large number of trades, as you know, which we call it scalping. So we're going to use one indicator to find the entry points and two other ones to confirm it, and I'm going to show you a secret way, my way to optimize it, because there are similar ways like this trading scalping strategy maybe out there, but I optimize it my way a little bit. So I'm going to just show it to you after I'm going to talk about the whole concept of this trading strategy. By the end of the video, I'm going to talk about it completely briefly. Don't worry. So one of these indicators I'm going to use to determine the small trend, and I'm going to use the other one to determine a larger trend. It works really good on both 5 and 15 minutes time frames. You can try it for yourself. By trying, I mean backtest it, or if you want to try it right away after, at least whenever you want to try a new strategy, especially in the scalping, try at least 100 back tests on different markets, different time frames. So this one is really working good on 5 minutes and 15 minutes, but as you know, the rule, the higher the time frame is, the more accurate your technical analysis could be. So let's waste no more time and see what are all these indicators about and how do they work in this trading strategy exactly. The first indicator we're going to use is the CCI. So I'm going to just search for it here. As you can see, CCI, and it's this one, Commodity Channel Index. I made it favorite from before winning this one underneath the technical section. I'm going to click on it and then I'm going to go to the setting. You can pause the video for a moment, just take your time, do the settings as I did it here, and make sure to put it instead of the dashed lines or dotted lines to lines, because we want to be more accurate, and leave the values as it is, and then make sure to change this section from line to columns, and the colors is just up to your reference, and leave the inputs as it is, just like that. Next, we need two confirmation candles. The first one is the super trend, and we need this one, which is underneath the technical section. So I'm going to click on it and then go to the setting, and again make sure to leave the values 10 and 3, and in the style section, take your time, pause the video and do it exactly as I did it here. I mean by the text, the color is up to your reference. And then what I need is one EMA. I'm going to click on it, and I'm using, in this strategy, we're going to use the 50 EMA. If you don't know how EMA works, I made completely dedicated session about it, which I'm going to leave the link down in the comments. So if you're new to trading, or you've already been to trading but you don't know the exact concept, you can just check it out in my previous videos. Find the links down in the description. So now let's see how this strategy exactly works. So the first rule is to determine the trend. So as you know, with the rules of the moving averages, the price must be above the moving average, which it is here. You should see a candle close above it. Then the super trend must be in green, and then you must take a look at down here. Because we want to go long, the CCI shouldn't be in the overbought territory, which is in this case here. So we must wait for a pullback to the EMA, which happened here, and then you can see a strong candle close here, and now you can go long pretty confident that it's going to be a successful trade. If you take a look at CCI down here, you can see that it is not in the overbought territory, it's in the middle, so you're good to go. So we can see another example happened here. We had a pullback, and then we must should I take this one? No, because the super trend is in red. I must wait for both the super trend is in green first, and then I have to check the price. Is it above the EMA 50 EMA? Yes, it is. But if I look down here, I can see I'm in the overbought territory, so I must wait again. I had another pullback, the price came above it. I shouldn't take this trade because the super trend is in red. Another pullback, another green candle, and then this candle at this point, or let's say the one before that, this one, this green candle, in this case on my chart is white, in your chart probably is going to be green. So this, let's say bullish candle, is telling us that can I go long? No, I can't, because the super trend is still in red. I must wait for the next one, which is here. So this one is a pretty strong candle. It's a bullish candle. It is above the 50 MA, and it made the super trend turning green. I checked down below. It is not in the overbought territory. I'm good to go long at this point, and it was another profitable trade. As you could see, the price went up. And then let's make some short examples. Yeah, here it's exactly the opposite. As you can see, the price went below the 50 EMA. We have a strong candle close. When I mean strong, I mean it shouldn't be a doji candle. So it's a strong candle with a healthy body, and then as you can see, the super trend turned into red. And now we have to check down below, and we are not yet good to go because we are in the oversold territory. We have to wait for another confirmation. So the price went up, it came down again, and here at this particular moment, at this candle, this bearish candle here, this one, let me zoom in, this candle here, we could go short, and of course it's giving us all the signals that we want. So the price is below 50 EMA, the super trend is in red, and down here it is not yet touched the oversold territory. So we could go short, and it was of course a successful trade. So here is another good example of a short trade. So you could take a short trade here. So the first rule passed. It is a strong candle close below the 50 EMA. Then you check the super trend. Yes, it is in red, and then you check down here, and it is not in the oversold territory. If you went short here, it was also a successful trade. As you can see, the market went way more down. So how to put the stop loss and take profits? Let's just start at this very example here. There are two ways. The classic way is the scalping way, which you can be go into the trade, come out of it shortly, and it's gonna, you know, there is profit, but it's so less. And due to the fact, even if you're using Bybit, but more or less you're going to pay the fees. So you don't want to, in large amount of trades during your trading sequence, let's say if it is 100 of them, you don't want to pay a lot for fees. So we want our profit to be bigger in order to cover those fees, and we can just calculate it as nothing in there. But I'm gonna talk about both of ways. The first way is to set your target point and stop loss. How to set proper stop losses and target points, don't worry about that. I made completely dedicated sessions about those in money management, risk management sessions in my module 3 playlist, which I'm gonna leave the link both above here and down in the description. Make sure to check them out. But long story short, if I wanted to take a short trade here at this point, I must first find there are two ways to do it. First, you can put your stop loss at the super trend line, which is slightly above the latest swing high here, or you can just place it at the latest swing high, which is not really wise, but here. And then there are two scenarios. If you want to trade on 5 minutes time frame, I highly recommend to, because the noise is higher, I highly recommend to set your target point to 1 to 0.5 risk to reward ratio. As you can see, it was a successful trade. But if you're on 15 minutes time frame, so the noise of the price movements are less, so you can go all the way 1 to 2 risk to reward ratio, which is already good. But as you can see, the market went way more down, not way more down, but it went down. And like if you wanted to take it like this, it was like 1.29, let's say 1.30% of profit. With 10x leverage, it was like 13% of profit. But if you wanted to take it all the way to down, let's say somewhere around here, it was almost like 15.5% of profit with 10x leverage. So how to do that, how to understand if we can take all this, like all of this movement with a really nice risk to reward ratio of 2.72, which is crazy good, especially in a scalping. I made previously, as I told you, I made the videos how to set the stop loss, both the stop loss and target points, using proper risk management system and position sizing, and how to determine support and resistant areas and find those key points of supply and demand zones, and how to find the best target points to come out of the trade, like step by step, make your trades risk-free. So I'm gonna leave the link again both above here and down in the description. Make sure to watch those videos, and by the end of the video I'm gonna leave the link in the end. Just make sure to watch them out. So do you want to just make money like here 13%, or you want 17%? Of course everyone wants more money. This is the way I optimize any trading strategy which I come up with. I just mix it up with a little bit of price action, with supply and demand zones, and then Fibonacci retracement levels. And I do not want to just go 1 to 0.5 risk to reward ratio, 1 to 2. 1 to 2 is good, but 1 to 0.5, after a while, of course, you're gonna make some mistakes, you're gonna feel fear, you're gonna be greedy, and you're gonna mess up some of your trades. Maybe you don't have a proper risk management system, and it's not gonna work out that well for you. But if you take these kind of profits like this here, then even you are paying way less fees on Bybit account, on your Bybit exchange account. By the end of your trading sequence, let's say after 100 trades, when you're going to calculate, you can see that you paid almost nothing comparing to the money you made. So if you have any questions about this trading strategies, powerful trading strategies, scalping strategy, just feel free to ask me down in the comments. Share your ideas with me. If you can optimize it yourself, optimize it, share it with this small community that we have on YouTube, and that would be really appreciated. And if you think that you need me to talk more about it, just leave your ideas down in the comments. I would be really appreciated to get back to you one by one, individually. That's my pleasure. Did you like this video? If you really like it, please hit the like button. And if you haven't subscribed to my channel yet, do it right away. And by turning on the notification bell, you're going to be the first to be informed when I'm uploading a new video, which I'm doing on a daily basis. And please share my videos with your friends, with your community, whatever it is, especially with your friends who are keen to know all about this unknown world of trading, especially about cryptocurrencies. Thank you so much for watching. See you in the next one.